Good morning. My name is Björn Zapfer. I'm a senior project expert in the European Climate Infrastructure and Environment Executive Agency, or in short. CNEA was set up quite recently by the European Commission, and you might know that we are managing on behalf of the European Commission a wealth of programs which are supporting the European Green Deal. Among those, in particular, also the LIFE program. A bit of marketing for ourselves. If you have any further questions on the LIFE program, you can also visit the LIFE stand later on in the afternoon during the virtual fair, or you can also attend a dedicated info session on the LIFE program at 2:30 in the afternoon. But having said that, I would stop here and would like to get to the core of the session that we have at hand at the moment. So you will get a lot more information on the Horizon 2020 project CRREM. And in this context, I'm very pleased to welcome all of you to this session, and in particular also to welcome Professor Bienert to the session, who will give you an introduction of what CRREM is trying and has tried to achieve in the past, and also give you an outlook on future steps and what will be the medium to longer term impacts expected in connection with CRREM. Professor Bienert is a qualified bank employee, and he's also since more than 10 years head of the IREBS Competence Center of Sustainable Real Estate at the University of Regensburg, and holds a university chair in this context. In parallel, he was also active as a managing director for Probos Real Estate in Vienna, my hometown actually. But having said that, I would like just to hand over to Professor Bienert to give us a bit of background on the CRREM project. Before doing so, just one more word maybe. We will have, after the end of the presentation, also the possibility for a Q&A, so for questions. If any questions come to your mind during the presentation, please feel free to introduce them already in the chat, and we will take them up after the session. Having said that, now really, would you like to take the floor, Mr. Bienert?
Yeah, sure. Thanks a lot, Björn, for your kind introduction. I will right away share my screen and start with the presentation. Happy to take the questions afterwards, as we just discussed. Would be great if you could unmute your audio functions so we don't have any interference with background noise. The Carbon Risk Real Estate Monitor is a project funded by the H2020 program, which is aiming to address a carbon risk, transition risk with regard to the real estate industry. As you probably all know, the real estate industry is not just heavily also affected by physical climate change. Again, my request, if you could unmute yourself, because otherwise we have too much background noise. Thanks. So it's heavily affected by climate change, but it's of course also in terms of mitigation, a very important sector to tackle climate change and to limit further climate change. And this particular project was addressing operational carbon emissions caused by the real estate industry. Let me just give you a brief introduction on CRREM, what we basically did during the project lifetime, which expired in February this year. But the initiative, as already said, was very successful and is in the process of being continued globally. We have the support of many organizations and funding partners, so we are really happy that this H2020 project was extremely successful. As you know, we are lagging behind in terms of the national climate targets to be in line with the Paris Accord, at least in a lot of countries. You see here that the business as usual scenario is of course not sufficient to meet the Paris targets. Current local policies and the pledges are also lagging behind, and there is a lot of more ambition needed to meet actually the 1.5 or at least the 2-degree target that was set out by the Paris Accord. And this was initially also our thought, to make sure that operational carbon emissions and operational energy consumption is not just aligned with the current national regulation, but is aligned with the Paris Accord. So what we actually did is create, besides the tool itself, and I will come to that in a minute, a benchmark, and this benchmark is actually a benchmark that has been downscaled according to the fair share of the real estate industry when it comes to operational emissions. Now, as you know, it's not just the EU with the taxonomy and other initiatives. It's also states, it's also cities, like in this case, New York, that is actually addressing emissions with regard to real estate lately very intensively. So there are in Denmark, in the Netherlands, in the UK, quite strict regulations already in place trying to limit emissions. And this is, I guess, as we all know, a very important aspect to tackle climate change with regard to the real estate industry. Now, what did we do? We basically downscaled the anthropogenic carbon budget that is still available to stay within the limit of 1.5 or 2 degrees. We downscaled that for real estate, for operational real estate, for individual countries, and for subsectors, because obviously a shopping center, let's say in Hong Kong, will also in 2050 not have the same emission profile compared to, let's say, a single family house in the north of Germany. So basically these fundamental differences between the different use types in the real estate industry need to be taken into account. And then we use that, so the left-hand side against carbon assessment, use that as a benchmark to actually assess whether individual properties or aggregated portfolios would meet these 1.5 or 2 degree decarbonization requirements. Now, looking at a graph that can illustrate what we basically did, we tried to stick to the anthropogenic carbon budget, as I said before, and derived in a very sound methodology that has undergone significant consultation phase and is, I would say, bulletproof, a decarbonization pathway until 2050 to be Paris aligned and, of course, nearly zero energy, have nearly zero energy in 2050. We did look at not just the energy intensity, but also at the E's. As you know, the F gases, especially with regard to cooling within the real estate industry, have a significant impact. To give you just an idea, for some retail premises, we saw 20 to 30% of the overall greenhouse gas emissions caused by cooling. So this is an important aspect not to be left aside. If you benchmark the individual property, it might be the case that your property is in the beginning still aligned, as you can see here, with regard to a comparison to these decarbonization pathways. But over time, the property will be more and more in the position that the more stringent decarbonization requirements might not be met. And we call this a stranding point in time. And this is a very typical, also in the real life, a very typical situation that the property will in 20 or 30 years be stranded, so not be compliant anymore with the decarbonization requirements. Of course, there's a lot of calculation and a lot of things that you need to take into account in the background. We have, of course, the ongoing grid decarbonization, and especially with regard to electricity, a fair share or a big share of the energy use within the real estate industry is related to electricity. So the grid decarbonization is, of course, has a positive impact on the emission profile. On the other hand, there is an impact of the changes with regard to climate in the respective in the respective countries, which means that we have a change of heating and cooling degree days which need to be taken into account.
Indisches Butter.
We have one colleague speaking, not unmuting. If we have a question, I'm happy to take the question. Otherwise, I would ask you to unmute yourself. Thank you very much. Of course, this leads to the strategic implication that you might want to do something about the situation, because it is obviously not good to have a property that might not meet the market requirements in terms of decarbonization. So this is, of course, the latest point in time, the stranding point, where you would actually consider an energetic retrofit for your property. We have also that function in the tool. We have a connection to the deep database. So we basically have, in an aggregated form, for different use types, different countries, also information for what kind of property you would expect certain marginal abatement costs in order to be, again, hopefully compliant with the decarbonization requirements. How high or how low might this investment budget be? We have, of course, these so-called excess emissions in this case. These are the emissions that would be above the decarbonization requirement, the decarbonization pathway. And if you put a carbon price on these excess emissions and discount them to a present value, you basically have also an indication of the investment amount you would consider for an energetic retrofit. As I said before, we did that for various countries. So we derived greenhouse gas emissions intensities. We derived also energy intensities, by the way, for 1.5 and 2 degrees for the different major real estate investment locations globally, not just Europe, but we had additional funding to have a global outreach, because especially this information was of high importance for global investors. And as you can see on the right-hand side, we have, of course, also this breakdown for different use types. So you can compare your Swiss office portfolio against the US office portfolio, Japanese office portfolio, and so on. The carbon risk assessment tool is a tool, if you look at the details.
Genau, er hat gestern seine Ergebnisse vorgestellt und auch die ARRE-Kollegen haben ihre Ergebnisse vorgestellt.
Höre Sie hier
was
in
aus den ARRE-Ergebnissen ganz informativ war eben, dass die.
So, jetzt ist der Herr Niemeyer wieder weg. Das ist ja, this is an interesting session. So basically here we have this whole building approach. We do not just look at the common space, because of course the investor, the landlord, the owner is doing this assessment. And the question is always whether the tenant controlled energy consumption should be included or not. And all the major initiatives globally, including our initiative, are now looking at the so-called whole building energy profile, which means we include the tenant purchased and consumed electricity, but also, of course, other consumption data that might be relevant. We convert that to CO2 emissions, of course. So the most relevant indicators are, of course, energy consumption, energy intensity, and carbon intensity, as you can see here on the right-hand side. This is a screenshot of the real tool. It's an Excel tool, which is on purpose not a black box. You can look at the enormous amount of mathematics and calculation in the backend, which is also important for investors, because they would like to see at the details of these calculations and not just have a certain carbon profile presented and not knowing what the emission factors were, not knowing how the normalization for heating and cooling degree days were. So this was also, I guess, part of the success that we had a very transparent calculation model. And here you can see, as I said before, the stranding point, in this case, 2041 for the US. As I said, we started with commercial real estate in Europe, and due to the huge success, we did get other international funding and did roll out the tool also for Asia and the US. What are the key benefits? You get a price tag on transition risk for operational carbon emissions. You are aligned not just to the national regulation, but to the Paris Accord. You have the possibility to look at property level and portfolio level. You have the possibility to do strategic scenario analysis with the retrofit function. So basically you can assume certain investment options, use the default data in the back end, or have your own assumptions. So we do have a lot of default data for emission factors, for, as I said before, heating, cooling degree days, for different climate scenarios. And you can agree with that default data or insert your own data or own assumptions in the respective parts of the tool. For instance, you can have your own assumption regarding carbon price development, or you can use the default data that is based on projections within the tool. There is, besides what I just mentioned, a vast amount of background data, emission factors, carbon prices, heating, cooling degree days, energy mix, development over time, of course, also because the energy mix is changing. That is, of course, aligned for different countries. So it's not the same projection for, let's say, Germany compared to Spain. The downscaling process to come up with this green curve, this benchmark, is a very profound methodology. We have used the SBTI convergence approach, sector decarbonization approach, for those who are familiar with this calculation scheme. And it has, as I said before, undergone massive consultation globally. We received a lot of input from various stakeholders and included that. And in the end, I would say the methodology is bulletproof, which is, of course, very important also for investors who are applying this for their portfolios. Very important, we started off with just decarbonization curves, decarbonization pathways for carbon. And then the industry was basically demanding also the calculation for energy intensities. And in the end, we had 1.5, 2 degree decarbonization benchmarks and benchmarks for energy intensities and carbon intensities, because some investors prefer one or the other metric for their strategic alignment. Very important also, we were and are still collaborating with the major real estate organizations globally, which is GRESB, INREV, UNREV, PCAF, SBTI, who of course also play, not just with regard to real estate, but also in a broader sense, a very significant role when it comes to decarbonization requirements. And that was, of course, the alignment with global initiatives, also part of the huge success story. Also, we did partner with Norges, PGGM, and APG, who are playing, when it comes to ESG and sustainability, as a front runner, a major role. They are one of the biggest investors globally, not just with regard to real estate, and their global outreach and partnering with them did also boost our dissemination activities and success within the industry. On the right-hand side, you can see here, again, a real screenshot of the retrofit measurement function. So as I said before, you can simulate a retrofit based on a very big database provided by Carsten Glenting from the DEEP consortium. And they have analyzed thousands of retrofit projects in Europe especially, and have a very clear view on what was the energy consumption before and after, and what was actually also the cost, the retrofit cost coming along with that measure, with that intervention. We are not just looking at the cost side here, but of course of increasing importance is also the trade-off between operational savings, which we of course achieve by carrying out an energetic retrofit, compared to the embodied carbon that comes along with the retrofit measurement itself. So of course it just makes sense, not just from a financial point of view, but also from an ecological point of view, to carry out an energetic retrofit if the savings, the carbon and emission savings afterwards are exceeding the embodied carbon of the retrofit measurement of the retrofit action by far. And on the left-hand side, you can see here something we are looking at the moment more intensively, which is the marginal abatement cost for real estate. And you see here, especially on the left-hand side, that for very high retrofit measure actions, the costs are of course increasing significantly. Not linear, but significantly. So of course, there is also this question to be answered, whether a very high intervention bringing every property, every existing building to net zero makes sense, or whether from a political point of view, the investment might be placed somewhere else more efficiently. But as I said before, we are just looking at that at the moment more intensively. What is the situation? As I said before, we have come to the end of the EU-funded project, but the initiative is continued. We have over 2,200 assets optimized, and of course these are assets in most cases with property value that is exceeding 100 million. So it's a huge amount of assets. As you can see, 450 billion euro assets under management were analyzed, funds committed to our tool. We have 30 million square meters of lettable space analyzed, and especially 2021 is, and I guess that's also due to taxonomy and the broad ESG agenda in the market at the moment, has been very successful. We had in the first 3 months of this year on our 2 web pages as many hits as we did have 3 years in total before. So this is really taking off significantly, and we have at the moment very strong response from Asia and America using our tool. You see here the alignments with different initiatives. As I said before, the Global Real Estate Sustainability Benchmark, INREF for funds, PCAF is the initiative looking at the so-called financed emissions. So it's not anymore just looking at the equity side of aspects, but also at the financed emissions, and banks will more intensively ask in the future when it comes to using real estate as a collateral, financing real estate. They will more intensively also ask for the carbon profile of the property, and by using our CRREM tool, you can score very high within the PCAF world to make sure that you have a very good result for your talks with the bank when it comes to finance. We are collaborating with SBTi. We are collaborating with ULI Greenprint in the US, who are listing us as a strategic partner, and with the very successful eco initiative in Germany, Austria, and Switzerland, who are looking at the portfolio level and use for their sustainability scoring CRREM for the carbon part. So this was important for us to be aligned with as many initiatives and have their support as possible. Was a very important part of the success story. And then we do have a global scientific and investors committee who is not just overlooking our results and ensuring that we have high quality output, but of course also supports our initiative when it comes to dissemination and stakeholder outreach. You see here the overview of the markets that we do cover. We have lately done many projects in Asia. We are at the moment with UNREF running a Pan-Asian project for the most important funds and REITs over there. We have just concluded a project for a major financial institution in Japan. We are working with JPIF in Japan also, which is the biggest pension fund, and in their sustainability report, they actually do mention that they are using CRREM. So it's really not just a project as intended before that is looking at commercial real estate in Europe, but it's looking at residential properties and commercial properties on a global scale. We intend to update the pathways. As you know, decarbonization and climate change is progressing. And of course, the input data is changing over time. So it's not a static approach to have these decarbonization pathways. We need to update them once new data is available. And we will do that going forward on an annual basis. You see here, and please visit our webpage, that we do have a lot of testimonials, a lot of users that were very satisfied with the tool and are not just using the tool and the pathways once, but basically on an annual basis for their sustainability reporting when it comes to the carbon assessment. Here you see some of the reports that are of course also all listed on our webpage that are referring to CRREM. So a lot of the initiatives which I just explained before who are partnering with us, they are also including CRREM and what we did in their recommendations for their stakeholders. So principles for responsible investment and the UN is when it comes to target setting for real estate, supporting CRREM as the way to go forward. The Better Building Partnership Net Zero Carbon Pathway Framework is also referring to CRREM and many others. So it's really important to, when it comes to being successful as a research project, ensuring a major impact in the market to partner with the most relevant stakeholders. And I think we did quite a good job. Laudes Foundation, just to mention this, is the partner for CRREM going forward. And I think the European Commission is very happy that the CRREM project is not just limited and it comes to an end after 3 years, but will be supported on an ongoing basis. So it's self-funding now, and we are happy to have these partners here on board. We have many IT companies also using the open source software that we have developed in the Excel tool for their further development. And I think the outreach with regard to organizations, investors, funds, and of course also software companies that are related to real estate is a good success story. We have lately been selected by the United Nations Financial Program to be the partner for their so-called property module. They are actually looking at TCFD and real estate transition risk, and we are in Asia and America have been selected to be the partner to run their property module over there. And of course, this is first of all a great achievement, but of course also leveraging our results in the US and Asia. And we do have, of course, a strong outreach also supported by United Nations in this respect. So thank you very much for your interest. I'm happy now to take your questions, and I'm sure that the presentation will be circulated and forwarded to you. So if you do have questions now or later, I'm more than happy to answer your questions. Thank you very much for your interest.
Well, thank you very much, Sven. I think really it was super interesting what you have achieved also with and what can be achieved also with H2020 funding. And we are super happy you mentioned it on behalf of the Commission that this is a very good example of a project that goes beyond what was to be achievable during the project duration, but has really achieved an establishment of the market on a very broad base, not only in Europe, but even beyond. So I think we can only congratulate you on what you have achieved, and also wish you a lot of success for the future. I suppose that was a lot of information to be digested, and I would, as Sven has already done, invite you once again to pose any questions that you might have. You can use the chat for that. So far, I do not see any questions, but again, feel free to introduce them, which is a good situation for myself, because it puts me in a situation that I can ask a question to Sven that would interest also me from the side of CRREM, but also from the side of the Commission. You mentioned a few times taxonomy, and also that this was integrated, but also gave a kind of a push to the tools that you were developing. Can you elaborate a little bit more on that? How relevant the taxonomy is for the tools that you have established, and also, is that a push, or is that bringing the market further, and if yes, in which way, and where would you still see importance of further developments in this context?
Yeah, thanks, Björn. We did participate already in the phase where the technical expert group, especially for real estate, of course, Ursula Hartenberger was leading that group, and we were actually also, as a project, mentioned in, as a best practice in the property technical expert report. We are, as I said before, looking at the operational carbon and looking at optimization over time. And we would be happy, as like many other organizations also in Europe, to have not such a static situation now for acquisition. As you know, it's more or less written in stone now how the taxonomy will look like also for real estate. It's very much, again, dependent on EPCs, which is, of course, a logical step. But you could also, of course, take another view and look at consumption data and so on. But nevertheless, we are very happy with the taxonomy because it, again, pushed the last laggards, I would say, in the market to a more sustainable view. A lot of investors that did not pay any attention to energy efficiency of their property portfolio in the past are now more or less forced to do so, because there is going to be, of course, some sort of differentiation between properties and assets that are taxonomy compliant and others that are not. And of course, investors are fearing that their asset values might be going down if they are not compliant. So basically what we are now, of course, offering, especially for the acquisition part, is a function whether you are compliant or not. And of course, this whole focus on energy consumption and transition risk is a boost for our initiatives. And it was a good approach to already start with this 3.5 years ago when we actually submitted this proposal, because we thought out of this vast amount of KPIs you have for a global reporting initiative report, for instance, I think up to 120 KPIs for real estate. I think going forward, the carbon intensity is the most important one. And I think it really turned out to be the case. So it's just a major driver for our initiative.
Thank you very much. I still don't see any further questions. You were too clear, Sven, I suppose, or it still needs a bit more digestion. But again, that gives me the opportunity maybe to ask you a follow-up on this. I mean, I see it's a very interesting tool also on the macro level to see also on macro level, you know, the alignment with Paris and so on. But it's also a particular tool on the micro level for investors, etc., for institutional investors and so on. And I can imagine fully clearly why a lot of those are also, as a consequence of the taxonomy, are very interested in the tool. But do you have done any kinds of maths, which kind of also monetary advantages the application of the tool can offer to these investors? I mean, you were mentioning stranded assets etc. So investment decisions, especially in the building sector, they are, they are decisions for a longer period of time. And if you are not aligned with possible developments on the market, we have the US on board, so there will be more, more impacts in this regard. There are certain risks, and these risks can be quantified to a certain extent. Did you do a bit of background calculation if you approach also investors to communicate to them, you have a risk, you have a tool at hand that can help you to be aligned, therefore you avoid risks, and that also is avoiding any costs in this level?
Yeah, of course, because we put a price tag on carbon. Of course, that could be done individually, or you just take the major available projections on carbon pricing, or you use, in Germany, we have new regulation in place, as you probably know very well. So you can use this 25 euros, or you say, okay, we're using 25 euros per ton now, and then move up to 100 euros. But basically, you can attach this price tag to the excess emissions on our tool, which means moving beyond this Paris-aligned situation. You have a quantification of the transition risk and calculated present value. We have, of course, this is a sort of theoretical situation. In some countries, we didn't have a carbon price in Germany before. So actually, the biggest German residential property investor last year said they did a test on our pathways and thought that they were too ambitious and might not be realistic that this regulation will actually come into place. And this year they came back and are now using fully for their whole portfolio the CRREM pathways and the tool, because they saw that the national regulation is actually picking up. And of course, not just on a European level, but Germany and of course also other countries are trying to, in terms of the intended national determined contributions, be more and more aligned, of course, with the Paris requirements. So this is nothing out of the blue. It is something, of course, if we believe that we try to, as a society to tackle climate change, this is actually what we need to do. And of course, if you have lousy properties that move far beyond these projections, you are in danger to have high prices to be paid in terms of the carbon pricing. And of course, also your property might not be in the center of investors' attention in the future, because in due course, due diligence will also, of course, look at the carbon profile. And if you see that the, energy source and of course, consumption data is far off market standard, then you would probably not touch this property if you have other alternatives in terms of your investment activity.
Yeah, thank you very much. I suppose the carbon price is the one side of the coin, but I would imagine also, that there can be effects also on insurance premiums, on interest rates of financing future investments, etc., etc. So that's a wide field, I would say. Yeah. Okay. So unless there are any further questions, again, the chat is very quiet so far. Unless there are any further questions, I would like to thank you, Sven, very much for this very interesting tool and presentation, and I wish you and all your colleagues a lot of success also for the future. I hope that you still keep all of us informed on what will happening, because I think it's very relevant what you are doing in the framework of all the endeavors that we have together with regard to climate and also energy targets within the EU, but also on the universal level, if you wish. So thank you very much for that. Having said that, I would also just like to hint at the fact that all of you in the afternoon will have the opportunity for networking. For that, you can also use the networking platform on your dashboard and could also fix appointments with other participants or speakers, but also stands at the virtual fair that I have mentioned. Also, if you have to digest a little bit more and need to rehear a little bit what Sven has presented, the recordings of the session will be available on the conference website shortly. With this, thank you very much again, Sven, and also thank you very much to the whole audience who was interested in the session. And with this, I wish you an interesting continuation of the event. Thank you very much.
Björn, thanks a lot for your moderation. Thanks a lot. Bye-bye.
Thank you, Sven. Goodbye.